Hey, it's Mike Wise with CMG Home Loans and your weekly mortgage update. It's been a little bit of a roller coaster ride this week with interest rates going on the upside here. So a lot of economic news came out, jobless claims, they dropped. The Philly Fed Index, that came out stronger than expected. Retail sales were up 0.4%. These are all factors that are giving pause to the Fed for lowering the Fed funds rate here in the future. So let's dig into some of the details. Retail sales up 0.4% month over month. You can see that over the last 12 months, it's been pretty strong as far as the retail sales. This is the consumer that is continuing to give strength to the economy. The consumer is out there. That's you and me out there buying stuff, and this is driving the U.S. economy. This is driving the gross domestic product, GDP, and that's the strength of the U.S. Economy right now. So the question is that are people buying on cash or credit, pay now, pay later? What are they doing to buy these things? Are they going into debt? And the numbers are showing that, yes, people are using debt to pay for things. And as we approach, I think we're 60 days away, just a little over 60 days away from Christmas. So the shopping season is ahead of us. How is the consumer going to react during this season here for the retail sales? And we may see retail sales go up here over the next 45 days as we approach the holiday seasons here. So watch for that. The Philly Fed Index, that came out. That's increasing. I know this is a crazy little graph here, but basically this is a survey of businesses and how their business is doing. And that survey, as limited as it is, it's a pretty good survey. It is showing that businesses are expanding right now. And that is, that's good news for the economy, but bad news for interest rates. So, but as this shows strength again in the economy. Bank earnings came out. This is the consumers are still spending. This is kind of their report here. Consumers are still spending. Borrowing on credit cards is up. So that's what we talked about. I think that it's continuing. Even though the consumer is spending, they are borrowing on the credit cards. And the chase for yield is slowing. So these are three things that the banks came out and said, these are the things that are driving the economy. And the chase for yield is slowing. That means that people are now taking their money out of CDs, out of treasuries, and not going for that safe yield anymore. So this is another sign that the consumer is on the consumer is more comfortable with the economy at this point in time. Oil prices. This is driving interest rates, and the war that is going on in the Middle East. This is a very volatile situation with oil. And what I mean by that is that Israel was, there's a couple of days here, a week or so, that they were actually going to bomb the oil facilities in the Middle East, and that was having a spike in oil prices, and that has since come down. And so the oil prices have come down off of that. But the war there, this is a very volatile situation for oil prices, which has a big impact on inflation, which will have a big impact on interest rates as well. So we got to watch for that and see how that plays out, because if we do have higher oil prices, there is going to be inflation, and the Fed is probably not going to move interest rates down at that point in time. So watch for that. But you can see this is the impact on the treasuries. Remember, the lower the prices, the higher the interest rates. So the treasury prices, they came down, and they've been kind of flatlining here for a little bit here for the last 10 days or so. And, if they go below those resistance levels or the support levels that they're at right now, which is kind of right in this area, right around par, we could see a further drop in price, which would mean that the yields would go up and interest rates would go up. So The yield, the same thing. It's kind of been flatlining right around the 4.074% level on the 10-year yield. And it could go either way here. So there's a lot of pressure. Just it's going to be a volatile time over the next 45 days up until the election, and probably a few weeks after the election as well. This is a sign that the bond market is kind of like trying to figure out where the yield is going to go depending on who gets elected here. But interest rates, I can show you that they're up a little bit from last week. They 6.62 last week, up to 6.68 this week. So this is kind of like just right ahead of the election, kind of interest rates driving up just a little bit because of the uncertainty of what's going to happen with the election and how tight it is at this point in time. So comparing last year, we were at 7.92, so way better than last year. 1 year ago, we're at 6.68 on the interest rate. So that's good news for us. Remember that we've in our lifetimes we've seen interest rates into the teens, and so this is way better, and we've got a way better hold on the economy and kind of where it's going. Zillow came out this week, modest price growth for the kind of the near future here in as far as the next year. Nationally, they think that 2024 is going to end up right around 2%, and they think that it's going to be a very modest growth over the next 12 months at 0.9%. So that means that some of the markets are actually going to go down in value here because we've seen some growth over the last 12 months or year to date. So we're going to see some declines in values, and you can see the map on the right-hand side here of where that might happen. So another thing to note is that rents are flatlining or declining. And so that's having a big impact on inflation. So as those rents come down or flatlining, that means that inflation is more under control, which gives the Fed more apt to lower the Fed funds rate. So a lot of moving parts here in this and what's going on. But at the end of the day, real estate prices still strong, still a good investment. But as interest rates do increase, you can ask me about how you can get the lower payment for the first year at no cost to you. So I can show you how to save you about $200 a month on your mortgage payment by just doing a 1 year buy down. That's a lender paid buy down. So hope you had a great week, and this weekend I will be around all weekend to answer any questions that you have, so please shoot me a text or give me a phone call. Would love to answer any questions that you have. Have a great weekend, and we'll see you next week.